Welcome to Mastering Your Financial Life, hosted by Judy Heft, the founder and CEO of Judith Heft and Associates, Financial and Lifestyle Concierge. This year, she's celebrating 27 years in business. In every episode, Judy interviews professionals who help others successfully manage their financial lives. You can find this show on YouTube, LinkedIn, Apple Podcasts, Spotify, Google Podcasts, Stitcher, and more. Judy is the author of 2 books, How to Be Smart, Successful, and Organized with Your Money for a Better Today and Tomorrow, and her latest book, Mastering Your Financial Life Cycles, How to Successfully Manage Money in Every Decade of Life. You can read chapters of her books and catch prior episodes of the show at www.judithheft.com. Now, here's the host of Mastering Your Financial Life, Judy Heft.
Hello, everybody, and welcome. Excuse me, I think I'm going to be dealing with a little frog in my throat today, so I apologize in advance. So today, welcome to our 82nd episode of Mastering Your Financial Life. And today, I'm really excited to be here with Gail Harris. Gail is with Wealthspire Advisors, and I guess I should say who I am too. I'm Judy Heft, Financial and Lifestyle Concierge. And Gail is a CFP, which is a Certified Financial Planner, but she's also a CIMA, C-I-M-A, which is a Certified Investment Management Analyst, and I think the two really complement each other. Gail specializes in financial planning, investment advisory, and wealth management, and she's worked in every channel of finance. She's really been in the wealth management field for years, and she's started out at a Wirehouse, a single family office, to a trust account, and now she's with the phenomenal RIA, Registered Investment Advisory firm of Wealthspire. So welcome, Gail. It's thrilling to have you here today.
Oh, I'm so happy to be here, Judy. Thank you.
It's my pleasure. So we're going to talk a little bit about money here, which is a good topic for us. So, first of all, let's talk about what are some of the top issues that clients come to you for and they want help with?
That's a great question. And if you think about it, when clients build their financial life, they do it in small installments, right? They start a job, they sign up for a 401k, they have a baby, they buy life insurance, they buy a home along the way, change jobs a couple of times, maybe at some point get a will. And all these sort of pieces are kind of fragments. And so it's no surprise when they come to us is the number one overarching question is, am I doing the right things? I've built this sort of mosaic of my financial life. And so what they really want is clarity in terms of what they are doing now consistent with where they want to be in the future. And so the way that we address that overarching issue is to gather all those bits and pieces of their life and sort of understand what they're doing now, gather information about their goals, and then do some assessments using the tools that we have available to really help answer that question. Are you on track or are you not on track? So that's the big picture questions that people come to us for. But underneath that, there's been a couple of trends that I've seen recently that I think are really interesting to share. I mean, number one, everyone's really interested about retirement. That kind of goes without saying. But recently we've fielded a lot of questions about housing, like people wanting to either buy a second home or maybe downsize or upsize their home. So we've been fielding a lot of questions about affordability and what makes sense and whether they should pay cash for it or use a mortgage. And sometimes that relates to their children buying homes. So fielded a lot of questions recently about, can I help my children with a down payment? How will that affect me? So those are some of the things that we're seeing lately. So those are kind of give you a snapshot of the kinds of questions that clients are coming to us with.
No, that's good information. So in regard to buying another home, a second home, helping their child, what are they talking about? What are they saying about interest rates? Because yes, they're high right now, but for you and I, we remember when they were really high, when they were 15 and 18%, and then they dropped all the way, and now they're climbing back up again. And are people afraid to be getting mortgages, or are they still feeling confident?
It's a little bit of a mixture, and I've been in the industry long enough that I remember when interest rates were higher, as you described. and went through some changes. And what happens is in the beginning, when you're adjusting to this higher interest rate environment, people kind of stall and they don't want to do anything because they haven't adjusted to it. I think we're now past that stage, which is probably why we're seeing so many housing questions come in. But we're helping them with two ways. We're evaluating if clients are in a position to do it, to pay cash, looking at how does a cash purchase and the impact on your financial plan compare to getting a mortgage. So we're looking at both of those. A lot of just retesting affordability. Like it isn't just what the banks will approve, because they might approve more than you want to spend when you look at your full financial plan. So we're doing a lot of testing that way. If you pay a larger down payment to have a smaller carry on the mortgage. So a lot of sort of finessing that decision to get people comfortable with it. But I really do feel that people have adjusted mentally to the fact that we're in a higher interest rate environment and making the right decisions for them.
So they need someone like you so they can talk to, that they can trust, that can just guide them in the right direction, because it is a little bit overwhelming, I think. So what are some of the other investment strategies that the high interest rate has affected? Are there any others?
Yeah, and actually this is the real positive side of higher interest rates. If you go back to the great financial crisis in 2008, interest rates dropped like a rock. So that was great for borrowers because interest rates were really low, but it really changed investment strategy. Because if you were to invest a portion of your portfolio in fixed income, which you need to do to offset the risk of equities, you really weren't getting return for that. It was really just a risk mitigator because the bond interest rates or yields were not enough to really outpace inflation. Well, starting in the beginning of 2022, we've had quite a number of interest rate increases. And as a result of that, we are back into some territory with fixed income, which are also known as bonds. Those two words are interchangeable, where now you're actually getting real return for that because the yields are so much more favorable and more in line with what we've seen historically. So that creates an opportunity for clients to look at the risk they're taking in their portfolio and look at readjusting their asset allocation to maybe reduce their equity exposure and to increase their fixed income exposure. And we can help guide them through that by sort of modeling what this looks like if they make those changes in the portfolio, both in terms of what we believe would be a sustainable long-term investment return, as well as how that would change their risk profile.
And I guess a lot of that depends on the age of the client too, because as you get older, you don't want to take as many risks. And younger people, young couples, especially young people starting out, maybe buying their first home, they're in a different risk category. So you have to be able to look at all different angles there.
Absolutely. And not just the risk, but are they taking money out of their portfolio now? Or is it a small amount, or are they largely dependent on their portfolio? So you're right. All of those nuanced conversations are really important to make sure that the advice is really tailored to what that particular client needs and what they're comfortable with.
Yeah, and I think that tells me that there's no cookie cutter answer to this. It really depends on each individual.
It really does. And I think people are sometimes surprised that when we start drilling down and asking the questions and trying to shape the response, that it really depends on a lot of the different factors that affect them individually at this moment in time.
Yeah, really, it depends. And it's the whole environment thing and where they are in life. So that's interesting. So what are some misconceptions about investment management? I mean, I think people, I'm on some of these finance groups where people put in questions. Actually, they're on Facebook, but I got a kick out of reading these retirement groups. And, what's her name? Jean Chasky talks a lot about that. And, so what are some misconceptions? I think people are, they want to do their own investing. They want to save the money. They don't want to pay the assets under management fee. So, what are some misconceptions about that you can talk to us about?
I think this is a great question, and I'm going to do a little bit of a self-own because I'm going to share what my misconception is. When I entered the industry in 1996, I come from a different finance background. I had been a corporate banker, and I was a voracious reader of all things financial. So I thought I really knew this stuff. And when I got really quite a comeuppance when I really started to work with clients and really understand what investments can do. And the biggest misconception is I thought what you wanted as an investor was the highest return possible. And I realized that, and so I was very diligent. And so I did all my homework and I looked at what had the best, 3-year, 5-year track records. And I realized that that was very quickly that that was a big mistake because markets go through cycles. And if you look historically to make that decision, you're basically buying everything high and at probably the wrong time. You may get lucky for a year, but you're probably doing the wrong thing. What I learned is that the most important thing is that you're getting the most return you possibly can for the amount of risk that you're willing or capable of taking. So it's really a different lens to look at it. It doesn't mean you don't want the high returns. You just have to be much more realistic about how to achieve those. And the other thing I learned was, when you turn on the financial press, there's so much talk and so much dialogue about the things that are interesting and sexy, right? It's the sizzle. In reality, the best investment advice is stuff it's far less sizzly than that. It's almost boring, and it's really is rooted in discipline. So it's kind of like seeing the star athlete on their game day when they won the big trophy and realizing that looks all glamorous, but what they're not showing you is the cut to the gym and all the repetitions that they did and the boring practice. Well, investing is kind of the same way. And in our world, the discipline is the asset allocation, making sure that you're having the right mix of equities for growth and fixed income for stability. It's doing rebalancing so that when you had sky high equity returns, that you're peeling some of that back and putting it into lower achieving things. These are very boring aspects, but incredibly productive long-term to help people get to their goals. So those were some of the more common misconceptions, and I was just as guilty as everybody else in my own journey.
Oh, that's great information. Let's take a little break right now, and we'll come back with Gail Harris.
Hey there. I just want to tell you a little bit about my new book that just came out called Mastering Your Financial Life Cycles. And here it is. It's how to successfully manage your money in every decade of life. I co-authored this with my CFO, Liz Levy. And together we created this manual that's going to help you through every stage of life. We talk about having a baby. We talk about young adulthood, pre-retirement, what to do when you're at that age of retirement. If you're contemplating divorce, do you need an estate plan? We cover all of these, each subject in a different chapter. And I really think that you're going to find this so helpful because at the end of every chapter, we have checklists that you can look at and you can use, and they can be a guide for you. So this is a wonderful manual that we've created. It's available on Amazon. You can also find it on our website at judithheft.com/book. And we're here for you. If you need anything, reach out. I hope you enjoy the book. Here's another picture of it, just so you know what's going on. Here it is. And I'm really proud of it. It's my second book. And I'd love to have you read it and give me your feedback. Judy Heft, judithheft.com, financial and lifestyle concierge, celebrating 26 years in business. And over the years, I've learned so much. And what I've been trying to do is impart a little bit of this knowledge to you so I can help all of you become as financially organized as I am.
So welcome back. Welcome back. We're here with Gail Harris, Senior Vice President of Wealthspire Advisors. And, that was we just had that little commercial about my book, Mastering Your Financial Life Cycles. And, it's a great one. But I know that you read a lot of financial and investment type books. So why don't you give us some of your favorites?
Oh, I love this, Charity, because I'm a great reader and a bit of a finance nerd. So I've read a lot of books about finance, but by and far, the books that I've recommended the most to clients aren't dealing with really the technical aspects of investing. It's really the more historical and almost philosophical aspects of investing. And my number one favorite is The Richest Man in Babylon by George Clausen. And not only was this written a long time ago, he wrote it in the 1920s, but he's writing about how timeless investment advice is by going all the way back about 6,000 years ago to how people would have managed money during the Babylonian times. And it's just constant reminder of how good advice truly is timeless. It's things like spend less than you make, diversify, seek good advice. But it does it all in a story format, almost like a parable. So very easy to read. It's very short. I think the best clients that I've ever worked with have followed the advice of this book, even if they've never read the book. So it is truly timeless and actually kind of a fun and
So do you want to
enjoyable.
mention the name again in case anybody
Yeah,
missed
and
it?
actually I have the book. It's The Richest Man in Babylon by George Clausen.
I'll have to put that on my website because we have a page of books that we recommend. That sounds interesting.
And then the second one is kind of in a similar vein, but also very different. And it's called The Ascent of Money by Niall Ferguson. And this goes into more of the history. So I didn't read that book until I'd been in the industry for a while, been immersed in, had already had multiple designations. And this brought it all into crystal clear focus because he goes into like how the insurance industry was formed and how lending and credit and borrowing has changed over time. He sort of dissects financial crises. And again, it's kind of in a story format, so very easy to read, but it just makes understanding finance today so much more sensible. And I would recommend people read that before they start digging into some of the technical aspects that will really have it make a lot more sense. And to guarantee that it's like a story, they actually turn it into a movie as well.
Oh,
So
wow.
the book is a lot better than the movie, but if you're not a book reader, I highly recommend the movie as well.
Well, that's great to know. That's good information. Thank you for sharing those books with us. So yeah, you'll have to give me those names too, because I'll put both of them on my website. So yeah, so let's just talk about one other thing here. So what about fees? I think that scares a lot of people away. They figure I can do this myself. I don't want to pay anybody to do it.
Yeah, and it's a great question, and I think it's something that people are always a little nervous about. When they first meet with us, they're not really understand how fees work. But just to kind of keep it super simple, it really breaks down into two different arenas. One is there are fees associated with an investment product. So you're going to pay that whether you work with an advisor or you do things on your own. One of the advantages of working with the advisor is sometimes we have access to products that you wouldn't have access to at a fee level that you wouldn't necessarily have access to. So it really depends on the product and all that, but that's something to consider. But those investment management fees are things like paid for exchange traded fund products, mutual funds, and then there are a whole host of other products. So those actually go to the company managing those products. And they can be super low, like a exchange traded fund that invests in S&P stocks can be like 0.03%, really costs almost nothing. And then fees can kind of go up from there depending on the complexity of the product, the type of product it is. Those go to third-party managers that manage those investments, but they aren't necessarily giving advice. So if you think about investment management, it's very much commoditized. It's not custom to you. They can do it on scale, and that's the reason that they can keep the fees fairly low. The other kind of misconception is people talk about how high investment fees are, but actually back in the day when mutual funds were first invented, the fees were around 6 to 7%. And so they've come down dramatically since then. Just, again, it makes sense from scale and technology and the way they're able to manage it. The second part of fees is to actually engage with an advisor. So, in our role, we charge an advisory fee, and that covers everything that we do. At least in our firm, that's how we do it. So it covers all the financial planning advice, all the meetings, reviewing portfolios, answering questions, helping with kind of the concierge level of, handling money transfers and all of that. We do all of that for one fee. It's based on the assets under management. So it starts at around 1 to 1.2% and goes down based on the quantity of assets that we manage. And that's what pays for us to do everything. So if you think about it historically, people used to pay that much just for a mutual fund with no advice.
I always say you get what you pay for anyway.
Yeah.
And it's always, and I find that I think it's really important to hire professionals all the time, whether it's a financial advisor, a wealth manager, an attorney. even a financial concierge bookkeeper such as myself. I mean, accountants, of course, and even coaches. I mean, I just always feel that, if you hire the best people, it's going to help you bring yourself to the next level, whether you're in business or whether it's just a personal thing. It always helps to have the advice of professionals.
And I think what really underscores that is a number of our clients are actually people in the profession. So it's not like they lack the knowledge. They may lack the time. They may lack the specific knowledge about personal finance. They may be in another area of finance, and they're the ones that never quibble about the fee because they understand that they're really getting value for their money.
Mm-hmm.
But I always thought that was kind of interesting and not what I expected before I joined the industry, of how many people that are actually in finance that seek the advice of a financial advisor.
It's interesting too, because we have a couple of clients that we've gotten recently that are wealth managers, and they just haven't been able to handle their own bookkeeping, and they're busy doing other stuff. And I think we just have to recognize that we can't be everything, and it's always good to hire someone that can help.
I agree.
Yeah. So how can our guests find you? This was really interesting. I know I learned a lot. I'm sure our listeners did too, but where can they find you, Gail?
So I work with Wealthspire Advisors, easy to find online. We have office. I'm out of our New York and our Westport, Connecticut office. If you're in Connecticut, I'm out and about quite a bit, so easy to find. And my email is Gail, Gail .Harris, Harris at Wealthspire advisors.com, or excuse me, at wealthspire.com.
Great. Thank you. And I know they can find you on LinkedIn and everywhere else.
Correct.
Yeah. Great. Thank you so much, Gail. Thanks for joining me today. It was a great conversation.
Thank you. Enjoyed it.
Thank you for tuning into Mastering Your Financial Life, hosted by Judy Heft. You can read chapters of her books and catch prior episodes of the show at www.judithheft.com. Thank you for your positive comments and sharing this show with others.